Thank you, everybody, for joining us for today's episode. Really excited. We have two really special people in the house today. Steve McClurg, he's the Chief Investment Officer for Exponential Capital. And we have Leah Wald, who is the Portfolio Manager and Head of Research there. Guys, thank you so much for taking the time out. I know we're coordinating like 3 different time zones here, so very much appreciated.
Thanks for having us.
Yeah. One of the first things I like to do, guys, is really just the path to crypto. And a lot of people always like to hear the stories behind each person that we have on. So, maybe, Stephen, if we could start with you and kind of tell us how you got into the crypto space to where you are today and kind of sort of, what you went through to get there.
Yeah, absolutely. Well, at the time that Bitcoin came out back in 2009, I was an emerging market and sovereign credit and currency trader and analyst at Guggenheim Partners. And the CIO kind of walked over to the desk and said, "Hey, there's this thing called Bitcoin. I'm not sure who should be looking into this. McClurg, you look at all the non-US currency type stuff. Maybe it's a currency, take a look, let us know if it's something we should be looking at." And I took a look and I was like, it's definitely something we should be following, definitely something we should be looking at, but probably not suitable for our clients, which were mostly at the time insurance companies. It's like, how do you even give Bitcoin an NEIC rating? For those who know what that is. And so I began following it pretty closely as early as 2009, and then really started getting involved closer to 2011. And then years later, when Ethereum actually came out, I was looking into the smart contract capabilities of Ethereum and thought that they were really interesting. And at that time, I was a portfolio manager still, in the fixed income space. And one of the biggest problems with the bond market is its latency and its incongruency. So if you own one bond issued by one issuer and own another bond issued by the same issuer, you often are getting two different things. And they also trade very slowly. Back then, high yield and emerging markets and bank loans sometimes settled in 10 days, treasury settled in 1, investment grade corporate settled in 3. And so the settlement times were really latent, as well as trading. There wasn't a lot of secondary trading. But one of the biggest things that I noticed was I invested in a lot of island nations like Bermuda, Bahamas, Cayman, and they're so small, but they have very high credit ratings, so they're very desirable. But they don't need a whole lot of debt, so they don't issue a lot of it. So when you don't issue more than $1 billion in debt, you don't get picked up by the indexes and nobody cares about you. So you might have a AA rating, like the case in Caymans and at the time, and you're trading at 300 basis points over treasuries, which is basically, double, triple B. So I thought that, smart contracts might actually solve a problem that bonds have. And that's in its covenants and in a lot of ways, you can actually have the ability to sell and trade amongst smaller hands instead of only big hands. So I really started following it closely, and then about 4 years ago decided, hey, I'm gonna jump out, get into the fintech space, leave asset management behind, and really start pursuing this. So that's when I made the jump.
You've been in this for a really long time. Wow, I didn't know it went that far back. But you're talking 2009. I think I still didn't even hear of Bitcoin back then. Leah, last time we saw each other, I was wearing this hat. It was a dark night in Vegas, and we were at Tone Vay's conference. A lot's happened since then, and you're back in Singapore now. But, listen, I know people like Tone and a lot of others have you on, always talking. about what's going on, and you have a colorful past in this industry as well. And I mean that in a good way. Tell us your story.
Sure. Your Bitcoin Carnivory Club. I understand that acronym anywhere. And I will mute myself because the monkeys and birds have been out in full force. So, yeah, it was really great seeing you at Unconfiscatable. That was a lot of fun. I always lose all my money at the poker tournament. So, I come home in different ways. I don't often tell the full story. So I'll tell it on your show. Because everybody hates the idea that I was a world banker, which I did work at the World Bank, so I'll tell the full story. So when I was 19, I got very lucky and worked for, her name was Obia Zek-Wesley, and she was the vice president of the World Bank. That was before the restructuring, specifically sub-Saharan Africa region. She, I'd say, has the mentality of a Bitcoiner or blockchain expert, in that she actually founded Transparency International and a lot of other things to expose corruption within finance in sub-Saharan Africa and Nigeria specifically. But anyways, at that time, M-Pesa was one of their main projects, and that was being launched in Kenya. And what M-Pesa is really the first SMS-based microloan system. So that was in 2009 that I was interested in working with the team on that and learning more about that. So when I learned about Bitcoin, at least its value proposition to me made a lot of sense. I didn't dive in full time, but it did make a lot of sense to me. And I'll say to this date, what really does pull at the heartstrings for me is I'm hoping that remittances and its use case in development economics and in the developing world does take off. I do believe there's initiatives. I do believe that there will be more done, but that's what did get me into understanding that Bitcoin really has true potential to change and help the developing world. Well, fast forward, I wish I had been working in it that long, but I hadn't. I was working for actually a Canadian licensing company, and they were looking to go public and list in China. So a couple of my friends were at Andreessen Horowitz. This is in 2016. And I learned about ICOs. So I was totally a shitcoiner. Not really. I didn't invest in any shitcoins. But they sent me all these articles. I was like, why the heck are we doing an IPO? Look at this thing. Are you kidding? This is only for liquidity. This is the most amazing thing under the sun, like most people. And so then my former partner, Tyler Jenks, approached me and said, Leah, absolutely not. You can't go forward with this ICO. And instead, taught me about—
saved you.
Big time.
I definitely wouldn't be at Unconfiscatable. So definitely learned the difference between Bitcoin, ICOs, alts, started really understanding where my heart was at, and then went in full time with Tyler, who was starting to invest heavily in GBTC, believing it was in this hyperwave, and especially with institutional clients. And so Tyler and I decided to partner up. I left my job, very much left that project. It did, I will say, switch to an IPO at the time. So luckily I got out of my head, but went full time with Tyler. And that's when I'd say I entered the space, is just learning GBTC, which at the time was really the only SEC blessed security, and understanding how to play it with exposure to Bitcoin. And from there, fell down the rabbit hole, as you very well know. And that's, I guess, where I am today with the incredible Stephen.
That's great.
And very on a side note, you just released a book not too long ago with your former partner who's since passed, but congratulations on that. And I hope that's doing very well for you.
Thank you. Thank you. And Tyler Coates, which I will make a quick note because Bitcoin is just so much fun. Tyler Jenks and Tyler Coates, my other co-author, who we had hired as the senior portfolio manager at Lucid, and everybody only knew him as Socrates, spelled incorrectly, until we launched the book and he finally, told everybody his name. So that is the fun part of Bitcoin, right? You never know who.
What's funny, you just ruined that whole thing for me, because I know Socrates, been with him at conferences. I never knew his real name. So now I know who Batman is.
Exactly. After this show, we need more alter egos, the four of us.
That's great. Thank you for that. Could you both tell us more a little bit about what you're doing at Exponential and what you've been working on for the past year or so?
Yeah, so maybe I'll go first, and then Leah can jump in because she says it much better than me. Yeah, in the last year, I was pretty involved in a company called Theseus Capital, which was launching a few different products. One of them was a Bitcoin closed-end fund, so a little bit different than a GBTC, where it's an actual fund vehicle that's publicly traded. We got acquired by Galaxy Digital, and we're tasked with launching their asset management group with some of the things that we were working on being the pinnacle of that. So we stuck around there for a little bit, all the time being recruited by Exponential, which is a similar concept out of Canada, out of Toronto. So really what Exponential does is it's a multi, in one term, it's a multifamily office that has become a merchant bank. But most of the people really hate those terms. So really what it is, it's a collective of people that are really passionate about ESG and blockchain. Okay. And so we have a venture fund that we invest in several companies that have those focuses. Make the world a better place. Plus, and one of the ways that we make the world a better place is through blockchain. And so we have several investments in some really good companies globally, but with a slight focus in Canada. And then we also have a more liquid fund that invests in digital assets of any type of security or non-security out there, including stocks, bonds, real estate, venture, and crypto. So those are the two main things that we're focused on. As well as managing separate accounts that are a little bit more bespoke in nature.
Okay. Interesting. I'm just gonna cut Leah off for a second, but the investment style it seems like you guys have a broad spectrum with a bunch of different sleeves in it. When it comes to both traditional equities as well as crypto, are they running within the same group? Do you have segregated groups handling those? How does it work from an infrastructure standpoint?
Yeah, so we actually we have a few advisors that help us in some of the areas that are specialists. But what's really interesting is between Leah and I, we've in our past we've managed everything from crypto funds to bonds to equities to currencies, commodities, and venture, and real estate too. As a matter of fact, back when I was at Guggenheim, I used to manage funds that were multi-sector and covered pretty much every one of those areas as well. So we have a small team that looks at best relative value across the spectrum, and we can make investments pretty much anywhere. Right now there are many sectors that we feel like are overvalued that we don't want to touch, and there are sectors that we feel like are actually very undervalued that we do want to get involved in. And ventures is one of those areas. We think that there's a lot of VCs that are kind of taking a step back to see what's going to happen, and there's a lot of good ventures out there that could get funding right now that we're working with, participating in.
Yeah, as an addition, I think also beyond the incredible hearts and minds of the people at Exponential, what was very attractive and very interesting for Stephen and I was the investments that are in our portfolio. There are incredible companies out there. I wish I could invest in many of them, but the ones at Exponential already have wrapped up in a couple of their funds, a digital venture fund, a digital asset fund that they have within their portfolio are truly incredible. And, one as an example, a small one that I love is Ledin, and they do collateralized Bitcoin loans. They just partnered with Genesis, so they're on the smaller end. There's larger ones as well, but having this ability for Stephen and I also within traditional asset management for even personal clients that we have as discretionary accounts, the ability to be able to allocate some of their portfolio into some of these funds that are holding these companies that luckily we actually are able to touch directly, touch with exposure to. It's just pretty incredible having that opportunity of those companies already being wrapped up in something that the team has built. It's pretty cool. Just adding to that one.
That's great that you mentioned that because, given the market volatility right now and how the wild things across most assets, ventures are a good diversification to your portfolio. Can you tell us a little bit more about why that matters right now?
Go for it, Leah.
Sure. I would completely, I would completely agree. I think I'll start by explaining how maybe Stephen and I are different in this space to answer that question. And also what gets me in trouble in this space all the time is I may be on these technical analysis shows with a brilliant tone base, but I'm totally a fundamental analyst and love to debate them on that.
I'm so glad to hear that.
Yeah, way too contrarian and always fighting. So Stephen and I are macro strategists and fundamental analysts. And though we can play around with a price chart, it's really the way that we see these things. Now, with, as you said, the volatility of the volatility with everything, both in what the heck is happening in traditional markets on top of what is happening in crazy Bitcoin, which is following, it's sometimes a tiny bit decoupled and everything. I mean, it's not safe. It's, there's ways to play it, but as an asset manager, it can suck, I'll say, but you have to be very conservative. And whereas sometimes we'll want to go right in, you do have to think from that investor perspective that can be a little bit more boring, but because the macro and fundamentals aren't safe, aren't making sense sometimes, you do have to invest accordingly. Now, in regards to your mention about ventures, absolutely. And therefore, that's really interesting for a diversified portfolio that we can build that the brilliant Stephen is building, because you really can provide that very interesting long-term hold through these funds, and playing funds is very different. It's very much a particular expertise of being able to allocate into funds and venture and understanding the time horizon, also the risk, and also which companies are rolled up. Venture in itself is already a very difficult industry, but being able to allocate it in a portfolio is incredible and also difficult at the same time. But I would say that it is an incredible place to put their money, to put our clients' money, to put the company's money, to put in any portfolio. I'll throw it on Stephen to maybe explain why. But it is a great opportunity, I'd say, in these markets where the technicals, I think, are ruling, even though the fundamentals will catch up. Mm-hmm. And so, I think it is a good hedge, but it is also more than a hedge. But maybe I'll throw it on my partner to maybe explain that.
Well, and Stephen, if you could dive in a little more, especially on the macro part, and explain to us, I guess almost how your construction of what your investments look like, or any reasoning behind that.
Yeah. So, and maybe what I'll do is remove COVID from the entire conversation, because as Leah knows, I've been talking about for, 18 months about a recession coming and really being led by corporate debt. Corporate debt had gotten really long in the tooth. A lot of companies that are, especially below investment grade companies, were barely making enough cash to service their debt, let alone pay off any debt. And they were simply issuing new debt just to pay the servicing on their existing debt. And
buybacks, right? Like servicing the debt and just to prop up the price of their stock.
Yeah, if even that, right? So we started seeing situations where Sears and Toys R Us, started getting into trouble. And now we're seeing other companies getting into trouble as well. And by the way, COVID, all it did, a lot of people say, well, this is a black swan event. Nobody could have saw this coming. Well, a lot of people saw this coming. All COVID was a event that accelerated the impact, or even created the impact to where, companies really started, getting into bigger trouble, right? And not being able to service that debt that was already super risky in the first place. So, and in my estimation, we would see, sometime this year, defaults in the neighborhood of 12 to 15%. And anytime you see default rates of 12% or more in the high yield bond market, the S&P always drops at least 30%. So massive risk off trade. Well, we saw that happen. We did see the defaults because the government bailed them out, but that doesn't mean that they're out of the woods yet. Airlines got a bailout. They're probably going to have more pain coming. A lot of retail is in a lot of pain, especially non-diversified retail. So places like Target and Home Depot were allowed to stay open in the US, but places that were a very specific type of thing that weren't diversified weren't allowed to open. And a lot of those are the ones that were in trouble in the first place, right? So then you've got companies like Nordstrom and J. Crew that were already looking at bankruptcy pre-February, and now they're starting to get hit as well. So all of this is really, coming to a head right now. The decline that we saw in the S&P, I think is just a foreshadowing event of the real decline that's going to happen. And there's a lot of theories of why, we had the rally that we did. It's a fake rally. It really is. I think Grant's Interest Rate Observer said it first and said it best, that, there's an article that James Grant wrote that said, if Warren Buffett's selling, who's buying? And he was the first one to break the news on it's Robinhood traders. and the demographics are like, 19 to 29. People,
they're all buying Hertz and Chesapeake and, all the others.
And the Jets ETF, right?
Yeah.
So it's speculative day traders that are bored because there's no sports, or, there's only so much Fortnite you can play in a day, and they didn't want to spend money on V-Bucks anymore. So they're day trading. Meanwhile, the real professionals are getting out. Yep. Right. And had been moving out, by the way, since 2019. But the real guys are out. So there's only weak hands left in the market. And I believe that we're going to see another major decline, probably somewhere in the 40 to 50% range in the S&P. And when that happens, all risk assets move together. And we just saw this in the cryptocurrency markets too, when the S&P declined as much as it did. So did the crypto markets. And really the reason why is when people are selling out, they sell two things first, right? Number one, anything that's liquid. And number two, riskiest assets. Bitcoin is both a risk asset and it's liquid. So it's always going to be sold first. Everybody thinks it's great, in the crypto markets that you have so many hedge funds. Well, they're calling them professional, or institutional investors, but really it's a bunch of hedge funds that are juicing their returns. And hedge funds are, in some ways can be your best friend, but in bad times they're the worst enemy, right? Because they're blowing out of the highly liquid, highly risky assets first and getting liquidity as fast as they can, and they'll sell it at any price. So that's why the crypto markets went down so much more than the equity markets.
I think you're singing to the choir here. I completely 100% believe. I mean, the fact that it didn't trickle down to the regular people about corporate debt just ballooning over the last 18, 20 months. And that coupled with, the COVID. Now, one of the things I want to ask your opinion on is I believe in a large pullback in the market coming up. Just creating a double bottom. But the thing is that I believe it's going to happen because I don't think we've yet realized our losses. And by that, I mean, we've had an economic shutdown. we're going into different phases that are opening up, and we haven't yet realized our losses in the fact of all the businesses that are going to go under. They haven't popped up yet. You give it another month, you give it another 2 months, all of a sudden those closed businesses are going to be our realized losses in the economy. And I think that's when it's going to really be taking a downturn retraction. I mean, what do you think about that? I mean, I just spitball that around with the wife. I say, hey, this is my future outlook. Let's take a risk-off approach to the portfolio.
Yeah, no, it's when you're if you're like a really good technical trader, this is the best event for you right now, right? But most people aren't. Most people pretend to be, and most people only talk about their gains and never their losses. If you're a true fundamental investor, like both Leah and I are, and by the way, I think that's how most people should be, right? Because you don't know the forces that you're playing against when when you're trying to trade. I believe that you should just be out. You shouldn't be short the market because we don't know what the Fed's going to do. There are people that do know, and we're not them, right? We can speculate, and we don't know the timing. The second thing is you can't long the market right now either, because it's the most highly valued market that I've seen in my lifetime, right? And and it's certainly in my investment career. I mean, I've now gone through 5 different crises, including the Thai baht, including the NASDAQ collapse, including sovereign credit, right? Including the oil collapse, including the Great Recession. And this is the peak of all peaks right now. So to think that we're out of the woods when the markets are this high and unemployment is as high as it is, and consumer confidence is as low as it is, you're really fooling yourself. So I think a good place to be right now is cash, and then if you're investing money, I think picking good ventures, picking good real estate deals.
Yeah.
Because if we do hit a period of inflation, which I think we finally could, but later down the road, any type of hard asset is great. But really, what we are right now is, we're at the. I mean, this mirrors 2 different periods of time, right? Remember when Bear Stearns collapsed in was it March 2008?
Yeah.
And then everybody's like, okay, well, no, Bear Stearns collapsed, government bailed them out, everything's good. And then Lehman collapsed later that September, and then the markets just really, rip lower. And I think that's what we're going to see now. It may not be tomorrow, but it could be months from now that that the market finally gets exhausted and moves down. It's also very clear that the current administration is trying to prop markets up at least until the election. So that could be a good time frame when we could expect a major downfall, but it could be earlier than that too, because you also have to keep in mind that any kind of bill that's passed is going to have House support, and if the Democrats got wise, they would say, well, shoot, why would I support a package that helps the stock market go up right now when that only helps my opponent get reelected? So I think there's going to be a little bit more consideration in the next thing that's in the next package that's passed. But Jerome Powell's doing everything he can to help Donald Trump get elected. So it's very possible that the markets could stay level until then.
So, with going back to Jerome Powell, didn't the government did announce today that they continue buying corporate debt at least for the next year or two, right? They said no limit to the amount of corporate debt they buy. You just think that's delaying the inevitable, and whenever that corporate debt repurchasing or purchasing happens, the market's down that much?
Yeah, absolutely. And by the way, they're not buying all corporate debt. They're only buying investment grade corporate debt, and they're also throwing in investment grade corporates that were or high yield bonds that were investment grade pre-February, there's a handful of them. Basically, they're calling them fallen angels. But that doesn't really help out all the other companies that are issuing high yield.
No.
So we might see spreads really widen in the high yield space. But I think what Powell's trying to do right now is he does not want treasuries to go negative. And the only way to prop up markets by not allowing treasuries to go negative is to reduce the spread in corporates.
I mean, let me ask you this, Stephen. I mean, one question is, what do you think the long-term effects are from us buying up investment grade products? Let's call it 3 years out. And two, he doesn't want treasuries to go negative, but when we experience a second and sudden drop, I mean, you look at the 30-year, which is an indicator of consumer confidence. I mean, where's everybody expecting things to go?
Yeah, well, there's two things here. It's a loaded question. Number one, the long-term effects is moral hazard. You now have the Fed deciding which companies are going to survive and which companies are not, right? So, that in itself is a problem. And by the way, even with the lockdowns in the U.S. with COVID, you basically, and it's probably inadvertent, but the local governments and the federal government basically decided which businesses are going to shutter and which ones aren't. So the mom and pops are definitely hurting right now, where the big chains and online retailers like Amazon and Home Depot and Target are killing it, right? Because they were allowed to stay open and they got massive online sales, Walmart, right? So these companies were propped up at the expense of local, small, medium-sized businesses. The Fed purchasing investment grade bonds is going to do that exact same thing, because number one, small, medium-sized businesses don't have access to capital markets. And if they do, it's going to be in the high yield space. It's not going to be, instantly, access to investment grade bonds. You got to prove yourself over time. So this just props up big businesses at the risk of slaughtering the small and medium-sized businesses. Second of all, one major issue I have with this whole bond purchase program is, if you look at who the Fed advisory committees are and who's on those committees. So first of all, the way that these advisory committees work is the Fed asks them, hey, how, what should we do in the situation? How can we prop up markets? And they start explaining to them and pitching them ideas. And then the Fed, will ask questions and say, here's what we're planning on doing. Well, Ackman is on the Fed market committee, and he had the best returns that he's ever had in his career between February and April, because he knew exactly when the markets were going to collapse, and he knew exactly when the Fed was going to step in and announce that they were buying, right? So look at the hedge funds that are on those advisory boards and see which ones did well. And then the second thing that's really interesting is BlackRock has two representatives on, one on each committee, one in investments and one in finance. Well, my guess is BlackRock was the one that proposed the plan to buy corporate ETFs. Guess why? Because BlackRock owns iShares, and iShares owns the largest corporate bond ETF. So guess who makes out?
You're going down a rabbit hole that will keep us
I'll
here.
take my tinfoil hat off for now.
Yeah, no, absolutely right. And I think, but why are we surprised? Why are we surprised at all in the fact that?
We're not surprised.
No.
This is the way the world works, right? And it truly has gotten worse in the last 20 years. So anyway, I'll take my tinfoil hat off for now. But just from a pure economic perspective, you can only support narrow spreads in corporate bonds for so long. But I do believe, and you brought this up, right? I do believe that treasuries will go negative at some point. It's already happened in other countries in Europe. And I believe that it will happen here. And even if the Fed doesn't want it to, it'll be market pressures I mean, if you're an EU citizen and you have a choice between German bonds, which you have to pay to hold, or U.S. Treasuries, which pays you to hold, what are you going to hold as a risk-free asset? You're going to hold Treasuries.
So no American exceptionalism on the treasuries that are staying positive, huh?
No, not at all.
You mentioned back to a point you made earlier about how the most liquid and the most risky assets are the ones that are sold off when the market goes down, because people, they need to make margin calls and they just need cash, risk off to cash. You've mentioned how far down you think the market will go. What impact do you think it'll have on Bitcoin and other digital assets?
Yeah, that's a good question, and it really is hard to answer because we don't have enough data because Bitcoin just hasn't been around long enough for us to really know, and it hasn't been around through a real risk off trade in the general markets. So it's sort of like a wait and see. I feel like there's been a couple of times now that we've been able to see the behavior, and one of those times was. So if you remember during 2017, the second half of 2017, if you look at Bitcoin versus the Korean markets, it was highly correlated, and mainly because South Korea was a big participant in the ICO craze and in cryptocurrencies. They're really the first country that really that really held tight to the values that the blockchain brought. That alongside Japan. And then what happened was in 2018, all the mining operations started moving to China, which caused Bitcoin to be very highly correlated to the Shanghai index, which actually performed pretty poorly throughout 2018. And granted, you could look at it, as a correlation or as a causation. I mean, there were other things that were happening. There was a bubble that formed already, but at the same time, Shanghai was the equity markets in China were really hurting, and it almost seemed like on a day-to-day basis, if the Shanghai index went down, you could count on Bitcoin going down the next day. And I mean, that was probably one of the best trading opportunities ever. Was during that period of time. Now it seems to be a little bit more widespread, and people that are taking risk in equities are the same people that are taking risk in Bitcoin. So I believe that there's going to be any kind of downturn in equities in the U.S. or globally, you're going to see a similar correlated pattern in Bitcoin and other cryptocurrencies, which basically just follow Bitcoin.
Makes sense. I mean, there has been some correlation in the past to market sell-offs here in the U.S. with Bitcoin going down. So, I mean, it would stand to reason that it should go down a little, but I guess the jury's still out on how far down. Yeah. Yeah.
I mean, I probably believe that if the S&P goes down, call it 40%, then Bitcoin will probably go down 50%. But I'm just putting my finger to the wind on that. I really have no idea.
Hang on, I got to sell on Robinhood.
Yeah.
I'm gonna have a conversation with Leah now as we're talking about Bitcoin. I personally, I'm a capitalist. I work in capital markets. When people ask me if I care, or guess where the price of Bitcoin is, I really don't care. My care is that people trade it, right? So that it's an instrument of use in that regard. With regards to Bitcoin, Leah, do you guys hold a sense of value on what the technology is doing, let's say, in the world? Does that, correlate with how you invest in it, or is it truly just an investing mechanism like it is for me?
Very good question. I think Jimmy and Giacomo would absolutely kick me off any show if I didn't say the truth of my absolute love of the technology. What do people say? We came for the technology and stayed for the revolution. Bitcoin is still in its nascency, is my opinion, and there's a lot more to go. I think that the developments made by Core are fascinating, interesting, incredible, and done correctly, in that it's the exactly opposite of Zuckerberg's axiom on Silicon Valley of move quickly and break things, right? Bitcoin Core is deliberate, slow, and steady. You don't see that in other altcoins at all. Very often it's exactly the opposite. EOS is potentially a great example of that one. And so I do think that as Bitcoin and as all of us in the Bitcoin space, start seeing even more tech advances that are just incredible with good UI UX, are more user friendly. I know Casa yesterday came out with a new product that's seedless, easy to use as a Bitcoin wallet, more for new coiners, I should say. And as more of these advances happen, I do think that it's completely reflected in the price action. Now, to tie that up though, with a little bit more of a pessimistic view based on the conversation that we're having, I still think that it's absolutely going to depend on the economy. And one thing just to add is that if you guys followed how the traditional markets and Bitcoin reacted throughout Powell's speech, was completely lockstep and crazy. It was spiked and dropped. So what's fascinating absolutely is that, we're not out of the woods of talking about negative interest rates, first of all. We have precedent historical for the BOJ and others of negative interest rates. And the only reason I talk about this, again, is that international markets are connected. Again, with the news of Powell yesterday, you see the rest of, the indexes, especially Asia, very, very happy, right? And so what's interesting to me about that is, let's not forget how much volume is here in Asia as well. So not just China on exchanges, but actually Singapore, if it's still the same, actually has the most activity from a volume perspective. So if we see the same type of downturn that we're talking about right now in the economy, if we see it towards November, if it's really highly correlated to the S&P, which I do believe it is, and that's another conversation, absolutely, then I do think that Bitcoin's price over here and therefore worldwide will come with it. Now, my worries about that as regards to tech is that the tech may not matter right then if Bitcoin is crashing. What will matter, that's I think pretty interesting, is that another bear market does have the beautiful ability for tech companies to build slower, and you have a Darwinism and the best ones coming out. I'll always remember at the Magical Crypto Conference, which I have no idea why I got asked to moderate the mining panel. That was a little over my head, but I love it. Actually, you can't understate the importance of mining. But Miha from Bitstamp said a very interesting thing on the exchange panel. And this was, I guess, 2008, May 2008. And 2009. Sorry about that. So what he said was, Josh threw him a curveball and said pretty much to the effect of, how much are you guys hating life right now? And the other exchanges were very optimistic and said, no, it's great, yada. And Miha said, it's been really tough, but it's given us the ability to build slowly and make sure that we're making the right steps. We've had to let a lot of people go. During the bull market, we took missteps, but this does give us a great opportunity to build accordingly and the right way and pivoting accordingly, etc. So am I following the tech? Are we following the tech? Absolutely, because the more adoption is needed with, if we're talking traditional markets, with better vehicles, with better instruments for institutional investors to get in, but also for retail investors to get in. Something that's interesting is just that GBTC is actually quite easy. All of us can go into our Fidelity account, could go into our brokerage account and buy it. It's confusing with the premiums and discounts. You can also buy 3iQ's product of QBTC in Canada. But what's fascinating is not all that many people do it. Right? They go straight for the coins, they go straight for the exchange, or they stay out completely thinking that it's just, it's too confusing, it's too volatile, it's everything, I'm gonna stay out. But knowing that you can just have, exposure to it in a GBTC or any other product that hopefully is rolled out in the future that's even better, and lots are happening. I think they're a little too sophisticated with a lot of the, back Singapore rolled out a futures product, cash settled here not too long ago. They're a little too complicated for retail, I think. And I do think that even though we're talking about Robinhood of weak hands, now that is very true. However, having retail going into Bitcoin comfortably via various products that are sound and therefore protect also the industry, I think with good, tech developments, one of them actually to shill our own stuff is, some of these, venture funds, I think are actually very, very good investment products. The question is, who knows about them? How do you know about them? And of course, the backbone of all that is the tech advances and ensuring that core is making sure that Bitcoin is stable, doesn't have the same bugs that a lot of the other altcoins have. So they're completely intertwined. Do we follow just the price? Probably on the daily a little bit more, but from a longer time horizon. But any tech advances that comes out, maybe our venture capital brain goes on a little bit more, but it's just also maybe from a heartstrings exciting for both of us. But I do think that it couldn't be more important, and I look forward to see what else comes out.
Okay. If people can just buy directly on an exchange, why do products like GBTC or QBTC matter right now?
I think that's a great question. And
I'm going to follow that up with all the news headlines on Grayscale's thing that's been going around this week, because I don't actually fully understand it. When the word redemption came up in the conversation, I said, whoa, step on the brakes. What do you mean? We're just donating?
Yeah.
Casino. It really is. Well,
and we're paying a 300 basis point premium or more?
Here's one of the reasons why. So generally people are lazy, and people don't like to log into 2 or even 3 different places to make investments. So if you're already on like a Schwab or Fidelity or TD Ameritrade or E-Trade, and you have something available to you, that's number one. It's easier, and people are lazy. And who's going to trust this thing called Coinbase? Who's going to trust this thing called Gemini? Who's going to trust this thing called Kraken? It's really tough for people to even understand what that is if they're just offering these weird things that they don't understand that's not alongside stocks. The second thing is most people actually trade within their IRAs or their retirement accounts. And the only way to access Bitcoin through your retirement account is really through GBTC in the US. And on certain platforms, QBTC, Interactive Brokers and Fidelity and a couple of others offer that too. So, and by the way, QBTC does have redemption, so you can actually get in and out there. But that's it. Those are your choices. I would encourage people to buy Bitcoin through, Casa. Just go buy Bitcoin and deposit it there.
I haven't had a request yet, but as an administrator in traditional hedge fund space, I did this firsthand a lot, which was qualifying fund clients as an investment product for IRAs and such. That would be interesting if that comes along and starts taking a foothold on the crypto side, to where, you go to a Schwab or you go to a Millennium and you say, listen, here's our fund manager, here's all the paperwork. Can we qualify this as a suitable investment for the individual IRA? Because right now, between the equities market and the crypto market, there's really not a hell of a lot difference in volatility. And I think a lot of people are up in arms now about the past, application denials by the SEC on ETFs, for instance, BTC ETFs. So I'm really, the lines are starting to blur.
Yeah.
Another question I had to you guys was, if you're a high net worth individual or a single or multifamily office, what do you feel is a better exposure if they want to diversify part of their portfolio into cryptocurrency or blockchain in general. Would you go the route of a venture fund exposure for a first-time family office, or would you go the route of a liquid crypto fund, and why?
Yeah, so I think a lot of family offices actually have longer time horizons, and they typically operate a business that creates cash flow and wealth for them at the same time. So they don't necessarily have to be in, number one, liquid assets, and number two, long time horizons. I personally believe it's better to invest in venture in and around the space. Like for instance, right now, given what we just discussed on where we all think the economy is going and where risk assets are probably going to go, I don't want to be buying Bitcoin right now. I'm hodling the Bitcoin I already own. I'm not selling, but I'm not buying anymore. And I wouldn't necessarily buy on behalf of other people right now either, especially when I expect prices to go down. But I think the best play, and this is a play that Leah and I both just recently made, is we invested in 3iQ. We already had a position there. We upped our position. And if we're wrong and Bitcoin goes up from here, then almost all of their revenue comes from their Bitcoin fund listed in Canada. So if Bitcoin goes up, they make more money and we win. If Bitcoin goes down, they still have cash flow and can survive. So it's sort of the best of both worlds, in my opinion, having that type of investment. But people also want to be diversified in their investments and have a couple of different things that are tied to the space and will actually appreciate in value if Bitcoin goes up.
And 3iQ, it recently made a splash in the headlines a little while back. You've given us a reason on what makes it a good investment. I know that you tend to favor closed-end funds. Give us some background or what your thesis is on closed-end funds. What makes them a good investment, and exactly any particulars in the vehicle itself?
Yeah, well, there's two reasons. So number one, and you mentioned this briefly about a Bitcoin ETF. I don't believe that the SEC is going to approve that, at least not anytime in the near term. And there's a couple of people going around trying to launch Bitcoin ETFs. I don't even know why they're still trying. They really should stop and stop raising money towards those efforts. This is not going to happen. They're just going to burn it to cash. And I can tell you all the reasons why, and it's probably we can save that for another time. The reason why why Canada, and by the way, the US as well, will approve a closed-end fund is a couple of different reasons. So number one, trading and markets of the SEC really doesn't want any kind of fund listed on a national exchange, which would be New York Stock Exchange or NASDAQ, unless they have very accurate insight into the price and the source of the price for Bitcoin trading. And that's simply never going to happen because Bitcoin trades everywhere. So until they get over that objection, nothing's going to change there, and they're not going to get over the objection. But a closed-end fund can trade on an ATS, whereas ETFs can only trade on national exchanges, which is why GBTC trades on an ATS or OTC. As well as other approvals that have gone through. Closed-end funds also, it's a really interesting structure, and I launched and managed closed-end funds many times in the past, mostly my career at Guggenheim, and it's great for the manager because you can control when redemptions happen, so you can actually hold instruments that are a bit more illiquid, but you also have time as a manager to actually do your thing and think more long-term instead of short-term. So when I make personal investments or investments on behalf of clients into things like bonds, if you do it through a fund, I do it through closed-end funds trading at discounts as opposed to mutual funds or ETFs or even buying bonds directly. Unless you manage a $5 billion fund, buying bonds directly, you're just not going to get a very good price.
And are you talking about protection for the fund from, let's call it, annual redemptions and lower gate percentages or staggered gates?
Well, so you're thinking about closed-end private funds. I'm talking about 1940 Act RICs
Gotcha.
that are trading on exchanges. So basically closed-end mutual funds. So a closed-end mutual fund, what's great about it is you can basically set redemption periods at quarterly or never in the case, but you can set them monthly or quarterly. That way, you as a manager can really focus on the entire quarter and the entire year, and not just be subject to daily redemptions like you are in an ETF. And people always get out of the markets at the worst time, right? People always buy high and sell low, and that's the difference between retail and professional money managers. So when retail's getting out is always the worst time, and you as a money manager that's managing ETFs are stuck just giving them redemptions whenever it's asked for. But in a closed-end fund, you control it a little bit more. So if you've got a good manager that's managing the closed-end funds, then they can actually work out of positions that have turned poorly, in a more reasonable time frame than instantly. So because of that, it's a really good instrument. But it's also a good instrument for Bitcoin, because the reality is Bitcoin, it's liquid and it's perceived liquid, but it's actually illiquid. You've got to find the buyers and sellers. There's a lot of people trading it, so there's a lot of volume, but there's a lot of fake volume as well. I'd say about 85% of the volume in Bitcoin is actually fake. So finding real buyers when you have to sell, it would be very difficult in an ETF. Whereas in a closed-end fund, you can sell it over a period of time when redemptions are coming.
Interesting. Leah, do you have a visitor next to you?
I do.
Too big to pick up, though, huh?
Yeah.
I picked up on the arm movement like this.
I know. Yeah, he was moving around. I got to make sure that he joined the show.
It's all good. It's all good.
Mine is laying next to me in the sun, just taking a nap.
Yeah, Thor was just a little jealous.
Beautiful color.
Thanks. Monster.
Interesting enough, I saw a video Leah had shared with me the other day with monkeys. Was it monkeys in a tree? Yeah, that's fascinating for Americans, because we don't have monkeys in our backyard.
Monkeys are crazy. The ones in Japan throw the acorns down from the trees at you when you go up north. There's a town north of Tokyo where you can go, and they throw the acorns at you. They attack you. It's crazy.
Only the Americans they throw them at.
Yeah, exactly. Yeah, sometimes I throw them down too at certain people.
So what's next for you guys? I mean, what are we looking at? Give us the before we close out, give us the 12-month outlook on your investments and what you guys are planning to do in correlation with where you think the markets are. We already know where you think the markets are going. We just crapped on them for about the last 40 minutes. How is that going to change how your thinking is approaching the portfolio construction? I mean, I'm assuming that you're acting in two regards as fiduciaries. One, to the family office, and then two, do you guys have external investors at the fund? So you have dual responsibilities almost.
Yeah, that's exactly right. And as you know, as fiduciaries, when you're dealing with a fund or funds, in our case, you do have to treat everyone equally or fairly. So we can't treat even family office different than than other investors. So those things are separate. But look, in general, the way that we're thinking about things is we are holding on to a lot of cash. We're waiting for the opportunities to move into the markets. We don't see them yet. We're not, we don't short markets. That's something that I've just never really believed in throughout, my career, because, markets can stay irrational longer than you can stay solvent. And shorting is the best way to completely lose everything when markets are irrational. So we only take long fundamental positions. And look, I think when we're definitely looking at things that we believe are going to be good long-term plays once the markets finally go down again. I think tech is really interesting right now. Banks are actually really interesting right now, in my opinion, even though the general markets are up and overvalued. Banks really haven't recovered as much as the rest, and they're definitely getting favorable treatment right now, and people just ignoring them. So if you have to be in the markets, that's a good place to be. I am pretty keen on pulling the trigger on Bitcoin again once we see the next leg down. Just because it's a great long-term hold. But I think real estate is a good place to be too, outside of ventures that we've already talked about. And real estate generally, a lot of people are scared of real estate right now because we saw what happened during the last, the Great Recession. And that was really real estate driven. This one isn't real estate driven at all. The banks have taken a much more reasonable approach to making mortgage loans. People have to live somewhere. We may not see real estate go up as much as it did in the last 10 years, but I don't really see it dropping in any significant rate. Anything really less than 5% over the next year or two.
Overall, or just residential?
Residential. Commercial is a completely different thing. I think we've got to see that play out. That we really don't know what's going to happen there. But residential real estate is a great place to be in right now. We're actually involved in one company that's doing condos and assisted living. So there's some really cool place there. But I'm not ready to make the move in commercial real estate yet.
Leah, what's your call? What do you think is going to be the next opportunistic move in the markets? In crypto. And I will not ask for your prediction of the price by the end of the year of Bitcoin either, because you'll get in trouble for that.
Yeah.
You can say it. I'd like to hear what you think it is.
Well, on the 3-second chart, I see the TD sequential hitting a 9 buy, I should say, aggressive 9. Actually 13 in Wall Street. So you trip me up. I agree with Stephen. I think in regards to this show and with Bitcoin, we're following very, very heavily. And as Stephen mentioned, especially the securities that we can put into. I think that there will absolutely be a buying opportunity, especially because, as Stephen said, not only personally are we long-term hodlers, but it is a long-term, beautifully long-term hold position. And therefore great for a portfolio. So I don't know my prediction, but I do think that we will see the dip soon. So we do have dry powder for that.
No prediction, really?
I mean, okay, come on.
I want to hear it.
No one's going to hold you to it, both of you. Leah first, what is December 31st? What will the price of Bitcoin be? And then then Stephen.
Oh, wonderful. Oh, you give me December. Okay.
December 31st, end of the year.
I have a bet with Tone, Socrates, and Fiboswani and a couple for July 1st that I think I'm going to lose. Luckily, it's only for a steak dinner, but yeah. Okay, I'm most definitely going to, I think, lose that one. For December, I think we could hit all-time highs. I don't expect a moonshot, but I think that we would surpass 20K.
Wow.
Yeah, I do. The only worry I have is it's right on the back of November. And I am in alignment with everybody here that I think we're going to have propped up stock markets until November going into the election. So it's very uncomfortable to say, but if we do see a pullback, a proper pullback, and I guess I couldn't even call it a pullback. I think that we are potentially going to see, Great Depression levels. All right, you guys are making me rethink this while I'm talking out loud. Jeez.
Real quick
Okay.
before Steven, what was the July 1st with Tone and the gang?
All-time lows.
Oh,
Really?
how fast the pendulum swings.
Woo.
Well, you don't mean all-time lows.
Yeah,
You
but
don't mean $1 or less.
No, 3,200, at least going under 3,500.
For July 1st.
wow.
I'm putting in a sell order after this.
In March, and yes, I did expect it. Joe Saz is on my side with that one. Actually, I should say Socrates is also, well, the three of us are going to owe steak dinners. We did expect that after the 12th, but yeah, I don't know about
Are
that.
you in alignment with this? With the low?
No, we're not aligned on this, but I would say that it doesn't matter because, well, first of all, maybe my first answer will be what every trader on crypto Twitter says. Judging by this chart, the price will either go up or down.
Please.
It's really what they're saying. But they do it in like 20 words instead of 2. So now look, I do agree with Leah that I do think that we retest that 3,500 level again, and then it'll probably, I mean, it may not go down that far, but I'm if I had to put just a line in the sand, I'd say we drop 50% from where we are right now, and that'll likely happen when the S&P drops. So I don't know if that's going to be in the next 2 months or after November. It really all depends on policy at this point. Long term, I don't want to put a price on December because December could be the aftermath of that event. So, or if the event happens in the next 2 months, it's all-time highs in December, right? So I think we're really a slave to policy. But look, just kind of generally long term, let's say over the next 3 years, I think that we do go beyond all-time highs.
All right, that's cool. Ryan and I are going to sell our Bitcoin after the show. We're going to buy in at the lowest rate we possibly ever did when it goes to all-time lows, and hodl it from there.
I'm going to get in trouble. So
I'm not selling.
Guys, thank you so much for taking the time out. Really appreciate it. Steven, great to speak to you again. Leah, great to speak to you again. This is tremendous, and we can't thank you enough for spending the last hour with us.
Yeah, thanks for having us. It was fantastic. Really enjoyed it.
Absolutely.
thank you so much for having us.
And everybody, how to contact these two guys and their fund. Everything's in the description. Definitely reach out, whether it's on Twitter or through LinkedIn. 100% for sure. These guys are the pros. So, guys, thank you very much, and we'll talk to you again.
Thank you.
Awesome. Thank you.